Thank you, Josh. Great panel. All right, great. So moving on. Once again, 30 minutes behind. So if anybody's looking at the agenda, if you're on the general chat channel on the very top, there's a link and you can actually see the access to the general chat and the agenda. Keep in mind, 30 minutes behind, like I said. So this next panel is, once again, I think all these are very interesting to me, but this one's market manipulation and managing risk. So this will be moderated by Steve Quan, joined by Enzo on Steve, Kyle, Michael, Creadon, and Peter Rozsa. So this should be a fun one. I'll let these guys get on and we'll go. But in the meantime, want to make a quick shout out to one of our sponsors, Cryptocurrency Wire and Jonathan Keim. Team is really incredibly amazing. We're a bootstrap startup at the end of the day, just trying to make this happen, you know, empower our network and bring people together to create this community effect that blockchain and crypto needs so badly, especially during the COVID-19 virus and all the things that are happening globally where we're stuck in our homes and houses. We can't go to the conferences. We can't see each other. But I think, like I had said earlier today, instead of hiding behind a keyboard and talking about it on Twitter or other social media outlets, you know, seeing each other face to face is really important. So with that said, Jonathan and team, go check them out, Cryptocurrency Wire. Great company if you want to do any press releases or any digital media. So with that said, I'll hand it over to Steve Quan and team for the next panel.
Good afternoon. Everyone hear me?
Yep, you're good. We can hear you, Kyle.
Hey, what's going on?
There we go.
What's up, Steve?
Hey, what's up, Kyle? So this topic is going to be about market manipulation and managing risk. And I know that we're on a tight time schedule. So Kyle, if you have some things you want to talk about, I guess on market manipulation, scams, risk management, any or all the above, feel free.
Scams and market manipulation always gets me fired up. I've been in space since 2016. I've seen pretty much everything. After a while, you start to like notice things. I wrote a whole entire ebook on avoiding crypto scams, and I think this is probably imperative, like the number one thing that any new person needs to know about before they even invest in crypto. Sure, you can simply just go buy Bitcoin and hold and wait and sell it and be profitable. But if you're going to go down the rabbit hole, you absolutely positively need to know everything about the scams and manipulation first so you can move around it. I mean, it's get up, SEC is taking care of stuff. People are calling BS out. People are starting to get smart. But in the end of the day, like, you should probably just know the playing field before you even get involved, you know? That would just be not financial advice or anything like that. Just like thinking smart, you know, about your investment or whatever. So I got a bunch of bullet points here. You want me to go over them or?
Sure.
So here's all of the crypto scams I've ever seen in the space. First is like hype lending. Basically, that's where the platform promises you like 40% after a certain amount of time. They lock in your funds, you send it in. It stops when new people start sending money in, or stop sending money in, or when people catch on. Then the platform disappears. They have all the money. BitConnect. Okay. Mining operations, you'll see on like social media, Facebook, Instagram, whatever. Someone will say, I have a S9 ant miner. Send me $100 and I'll give you 700% in a week or 10 days or whatever. Obviously, who's going to make 100% in a week unless you like some crazy trade or something? When you pay for services, I think everybody here knows this, but I don't know who's watching. So when you pay for services, there's no buyer protection. If you don't trust them or know them, you shouldn't send them money because they can just take it and run. There's no way of getting it back. Pump and dumps, those are organized for profits. I know that's so illegal in stocks and Forex and crypto with so much platforms all over the place. I'm personally in some of these groups just to see which ones are pumping, just to find data points and find out like what happens when it happens. When someone pumps, what does it do to the coin? What does it do to the market? Are people pulling money out of different coins to go into that? Who's getting taken? Because the more information we know, the more we can share it to the public and let them know how it functions so you can avoid it. There's like mining malware, like if you're on a website or something, your computer starts heating up real fast. All your GPU and your RAM is getting eaten up because something like the Monero, there was some hacker or something using Monero mining software, tapping into all kinds of people's computers and mining, and then taking little bits of Monero, which is untraceable, right back to their own wallet, and no one could do anything about it. There's like ICOs made for money grabbing. Steve probably has a lot to say about that. Free crypto giveaways where, like on Twitter, someone was using Vitalik's name and saying like, give 1 Ethereum and we'll send you back 3 to somebody. Especially, someone's going to get 3 back. So many people would send money there and they wouldn't get it back. And then they would go blame Vitalik or Ethereum, the Ethereum Foundation. Fake websites, misleading advertising. Like you go to a website and they'll say seen on Huffington Post or Entrepreneur Magazine, hacked, whatever. Do your research, because people just throwing those up there on the website, taking your money, and then they disappear. So there's phishing
Kyle, can
emails.
I say, I think, I know you're on the mod, but I would say I try not to use absolutes or tell people, but what Kyle's saying in whatever it is, I just think is so important, whether it's crypto or fishing or sport, like especially when it has to do with money, just doing some research and knowing what you're doing. Like buying something because you saw it on YouTube. Well, guess what? The guy that bought it on YouTube, he's already long it. So he's just passing it to you. Or if I don't know what something is, it's hard for me to want to put capital in that allocation. But sorry, you guys are the group. I'll be quiet.
Thanks for joining, everybody. I just want to chime in here because I know Nick Birnbaum has asked a few questions, and I want to give him a little bit of foray into this thing. So he said, without regulations, what percentage of crypto companies that do an ICO do you think are legit? Love to open that up to you guys.
If you're saying legit, that could be pretty open-ended. I think the 3 things to look for is like leadership. What kind of team do they have? Do they have real use case? And are what they claim that they're going to do, is it realistic?
Yeah, and so, I'd say as well, like on that, like checking if the team is actually real people, and like doing a little bit of diligence on the people. There have been some tokens that have had the same person in 3 different outfits representing it as the team. Like do your litmus test. I think that's education.
So I take a different viewpoint. Well, I mean, not a different viewpoint. I agree with you guys, of course. I mean, that's so obvious, right? It depends on what's going on. So when the market was like burgeoning, all of the scammers will enter the market quickly. Now, if you look at what's pretty funny is those people who do those Bitcoin trades, those big block trades, they're literally selling right now masks, sanitizers. So the scammers will always come into a space when they see money there. And then I think after that bubble kind of burst a little bit, the good thing about it is now maybe it's going to be a little bit less, but there's 2 issues. One is we're global and we're international, which kind of makes it difficult for us. But and there's no regulations and there's no listing requirements, right? Like there's no broker dealer doing a full due diligence, right? There's none of that. And even with all of those tools, 20% at least, and I say 50% of the OTC market and the normal equities market is borderline fraudulent or borderline not real companies. Okay, so if you got to look at, even in the regulated world, you have situations of fraud and an 80-20 rule probably across the board when they're regulated. Without regulations, And with the fact that it was a new marketplace, that skyrockets. So I think in the beginning, we probably were at like 60%. It's hard to give a number. I'm not really doing that research, but I think there were a lot of bad people out there trying to take advantage of the opportunity, like the way they are now in the COVID crisis, to take advantage of and price gouging on masks and other things. So a lot of the same types of people. I think that Nick actually works with me. I think that you just have to be. We do a lot of homework. We do a lot of research. We talk to a lot of people. But we look at nodes, we look at mainnet, we look at whether it's a real company, management team. Can I verify the management team? Can I KYC them? If I can't do any of that stuff, it dies.
What do you think about market manipulation by exchanges? I have a lot to say about this, so like,
Oh man,
I should go last.
I'm a former NASDAQ guy, so to me, this is like I'm blown away. They make specialists and market manipulators on Wall Street look like, saints and angels. I believe you can just see it. I mean, it's really not hard to see. If you've been in the markets before, you can see the market manipulation. They're front running probably every trade. They probably have algos to help front run. That's why, like, if you trade on an exchange and you put up a sell wall, or you load up a lot of tokens, you see the price will start moving down really quickly. But if you hit the bid and you don't show them anything, you will not see that as much, because you're kind of hiding the algo. Because the algos, you're tricking the algo. The algo is just is showing you the same amount of quantity, and you're just hitting it. They don't see your depth of book. So that's more of a trading strategy, but there is definitely market manipulation. And to be honest with you, I tried with one of the big exchanges, and they were into it. But then at the end of last year, my champion at this exchange left and started his own exchange. And my whole thing was, we need to create a self-regulated organization amongst global exchanges that helps to dictate government policy, kind of trickles down. I was going to even try to get them to join the World Federation of Stock Exchanges, which is an old school stock exchanges group. It's a nonprofit trade organization, so that we could start acting and looking like a real exchange, or as a group. And then listing qualifications, right? Why are listing qualifications $1 million? Or, what? So if you have enough money, you get the list. I mean, that doesn't make any sense. And then if you pay them in your tokens the first day, they just dump the whole thing. So they destroy your actual token price.
You got a smart contract, slow drip feed them their payout so that they don't like tank your entire project.
Yeah, and they will. They don't care. I mean, really, do they really care? So I think someone said early on at the first, like on the first sessions, someone said that they believe that a lot of the exchanges will disappear, or they will be running underground, basically. I don't know what the play is going to be. I mean, being an exchange person for most of my career, I do think that, like let's put it this way: the day that NASDAQ and NYSE decide to turn on a crypto exchange, they already have all the feeds into all of the big banks and brokerage companies, all that stuff. And they're going to go after the Binances of the world, right? They're going to go after these guys because they're going to say to themselves, we just got to turn it on. And they have the technology already. It's not like they don't have the technology. It's not like the way it used to be when the tech was a big capital infusion. You don't need that capital infusion anymore, or that OpEx, basically. So as soon as they say we're in it, there's going to be a lot of competition from the traditional exchanges, which are tied to the governments that they work with. I mean, the New York Stock Exchange is still a national treasure, and it will continue to be that way. So for them to try to compete is going to be they can compete, and they will, but I think it'll be quite difficult, or they'll get bought out, and then they'll get regulated. But the technology of our exchanges is better. The clearing systems, the settlement systems is much better than the technology that they use, because you can't trade a stock across 5 different exchanges globally using the same software code. You have to, it's always being changed, right? Everybody's running their own software. So that, I think, is going to be the efficiency. That's where we're going to add value to those kind of traditional exchanges. But if the large exchanges, what they should be doing as a strategy, and I kind of preach this to anyone who I talk to from a large exchange, I'm like, look, you have to try to join the crowd a little bit, still, and why don't you become transparent? The first one to do that will probably become a bigger winner.
Right. And do you think this speaks to the fact that they need to innovate in just order to survive in this space? Because like the banks, they were protected by by centrally issued currency, and now with the rise of cryptocurrencies, we have options. Now with the rise of exchanges, there are so many options and there's so much innovation that even the centralized exchanges facing a challenge of existence as we move towards decentralized systems and exchanges.
I think the decentralized systems will become attached to KYC endpoints and be acting almost like what we used to call the ECNs. I don't know who. I think Steven might be from this time, but the ECNs during the 90s and the deregulation, there was all these small exchanges that popped up, and they were like not exchanges. They were like little kind of limit order books, and they used to take deal flow, and they still do. Bats is one of them. Instanet.
Yeah.
And then most of them got bought out and gobbled up by the bigger exchanges. That's going to happen here. But I do believe that if the issue for a lot of these folks is that the regulation of transferability of an asset across borders is the big issue. Do you know that we still have this ADR? Do you know what an ADR is? It's like an
American Depository Receipt.
Right. It's like an ancient tool. It's dumb. It doesn't really need to exist. But basically, it's taking a European stock, they turn it into an American depository piece of paper, and then they have it traded on the U.S. It doesn't. It's useless. So I believe that that's what's going to happen there. I do think Binance and some of these guys like Bittrex, it depends. It depends on what they do. I think Asia has a great opportunity to build very powerful exchanges for the people who want to trade crypto, but if they keep on running things like BitMEX with 100 times leverage and all this other stuff, it just becomes hard. Yeah, it just becomes hard because BitMEX to manipulate. You can just see it. It's being tracked now, and that's the other thing. When everyone starts tracking, gets better software like Chainalysis, I know does this and stuff. But once and I don't want to plug anybody. I'm just I don't even use the product yet. But the fact is, once we start seeing more people tracking all the data sources and looking at, we will start having much better data and clearer and transparency around it, whether these exchanges want to or not, because we'll just figure out the game. So as that starts to happen, a lot of the guys that
I have a question
yeah, sorry.
It's actually, this is for all, it's not exactly a market manipulation. It's more of when people seem surprised that, I guess, Wall Street was involved years ago. The NYSE bought ICE Exchange because I used to trade cotton and Brent. So, but do people know who owns Bakkt? Well, the ICE owns Bakkt. So the NYSE actually has that, but that's not really something publicized. What do you guys, that was a question where I actually don't have the answer, and I was looking if anyone has an opinion on that. And the second one you touched on was 100 times leverage is absurd. I mean, I know the legal limit, I believe, for an ETF is 3x, and that the TVIX blew up because 3x on an extreme can go to 0, but 100 times you should, I guess, need some sort of liquidity profile. But
when Lehman
what do you guys think about it?
When Lehman went bankrupt, they were 27 times leverage. Now they have Dodd-Frank and all that stuff and all those rules to make them not do that again. Although right now they are kind of letting them get more leverage on their money, which is a little bit dangerous. But they were at 27 times, and that was like egregious to Wall Street. 100 times for a retail trader who has no sophistication, that's gambling. You basically go into
We're off the Kyle. What do you guys think on that?
But is gambling
5 times for Binance, actually, which is beyond 100, which is even more chaotic.
You
Sorry,
said
Kyle.
250?
No, 125.
125.
But another thing, while you guys are mentioning this, was How about the bear and bull tokens that just got delisted? That was an experiment. A lot of people got wrecked on those, I think, because they didn't actually match the sentiment of what the coin was actually doing. The charts didn't match. So that was kind of like a failed experiment right there. What do you guys think about that?
Kyle, can I answer your question? And Enzo, I believe that, ETNs, they're a proxy. It's just like Tether is a proxy for the dollar, but if you look at their website, Tether tells you they don't own 100% of dollars. It may include accounts receivable and blah, blah, like that's fine if people think it's, but on the fine print on those, I actually look, they have to rebalance them all the time. So it's like you're buying something where it's a derivative. So yes, I'm sure that they tried to, I guess, take advantage where I wouldn't be surprised if the charts did not overlay. But what do you guys think? How about Kyle Kemper?
I'm not a trader. This isn't my total wheelhouse around there. But philosophically, I believe that like somebody should have the ability to to engage in 100x, in 125x if they want to take that risk. I don't think that large institutions should be taking that risk and putting their stakeholders to that risk that they're taking. But I think in what this entire technology is allowing for is us to experiment. And if I want to play a serious game of 1000x, that's it's like playing the lottery in a sense. But I'm a little bit out of my wheelhouse here.
Kyle,
the problem is the way that the problem is that you have investors or you have people who don't know what, I mean, it's kind of like the way it's like the ICO scams, right? It's like, it's buyer beware at the end of the day. When I talk to people that are from, there's, like buddies of mine that are, PMs or whatever, they kind of make fun of me. They're like, oh, it's a scam. Bitcoin's a scam. And I'm like, well, no, it's not. But yes, there is, it's new, it's brand new, and it's global. So it's definitely a buyer beware type of approach. You have to be cognizant. You do not expect these exchanges to be altruistic or playing by fair game. I mean, by rules, because the rules don't apply in this space. So just be aware. And if you want to do the 100 times leverage, fine. But yeah, I don't want a pension fund manager to ever say, oh, I'm going to take the pension fund and I'm going to try to do this 100 times per perpetual swap and let's see what happens then.
And I think this rolls back to something you were saying earlier too about like the need for SROs within the industry. And I think with the rise of digital identity as well, we're going to have the ability to really kind of cast reputation scores and get behind and be able to like delegate trust to other groups and parties. Like I know a lot of the companies and services and people that I know, like I would give them like, my own trust NFT that they could then broadcast to others or include in that. And I think like, shout out to CoinGenius, and what they're doing is trying to establish, this effectively a ratings agency, an SRO, a community-driven, big data-driven platform to protect the consumers in the world. And they're not coming to protect the consumers because government's telling them to. They're doing this because the industry is telling them to, and because this is a needed solution. So filling the gaps, the market, filling the gaps and solving the problems.
So I think what both of you guys were saying, I guess all three of you, the main thing is education is the problem for retail coming on. When someone sees a tweet from an influencer saying they're printing more money, go buy Bitcoin. Anybody can go buy Bitcoin, but do they know what they're doing? Because once you just buy Bitcoin, then, oh, what's this over here? What's this over here? They go try it, your money's gone. And where's it go? That 1%, or the exchange, or the whale groups, or whoever is manipulating at that point. So, I mean, that is the biggest issue I have with crypto. I've been trading for years, but at the same time, it pisses me off because I see so many people get taken. like I'm done with it.
Yeah.
So I think education is the only way to get through that right now.
Well, I think we're at that point where things are going to get. I think for us, for this industry, we're going to get. It's going to get better because most of the people that are left standing, I know there are people who were in the crypto industry and then they were gone, right? And I think that, for guys like Kyle, like Kyle's right. I mean, yeah, I would love. I think we all believe in the philosophical structure of what you're saying, and I think that everybody wants to move down that road. And I think it's cool. I think it's good, and I think we can do it. But and globally, you kind of have to because regulators can't. They can only regulate in their own jurisdiction. And when you have a global, like, who's going to go after BitMEX? How could you even sue them? So you don't have the courts. So you have to use the crowd, and you have to use our own ability to kind of flag people and maybe have some ratings and so on and so forth that helps.
Moving forward, I know when I first was introduced to this whole space, it was through a guy who no longer exists and cannot exist in this space, like a total bad actor. And that's a real testament to some of the people who, or I still am in touch with from the old days, who are honorable and noble, because there's always, you're presented with a lot of opportunities to compromise your ethics and and make a quick, sell your soul in this ecosystem, but it catches up with you. And the other thing about the scams too is we talk about education. Getting burnt is part of the educational process for a lot of people. I know the Quadriga collapse in Canada, that pissed me off like nothing else. But a lot of people entered in and just didn't understand, and that's terrible. But now all those people getting burnt kind of adds to the anti-fragility of the industry, meaning that they will be ambassadors for better education and better practices about storing your keys and acting responsibly in this and being good ambassadors, evangelists.
The one news that I don't know if everyone knows this, but there's a $1.4 trillion class action lawsuit against guys like BitMEX and Binance and I think even OKX about this 100 times leverage stuff. So I believe they are going to go, and I believe there is. That's what's going to happen. You're going to start having what I used to call the shareholder. There are shareholder law firms that basically just go after any public company that goes down. So when Overstock dropped so much, they had a class action lawsuit kind of filed. A lot of times they just go away because they're not real. If the insiders sell during that downward term, then they have a case. But we've been seeing that in the equities market. Those same attorneys are starting to do it in crypto. So you're going to see a tremendous amount of litigation over the next couple of years too, as this market starts to become more regulated.
All right, guys, we have to close up soon. So my last question is regarding the title of this topic. If you guys could give the watchers 1 point on risk management each, whether it's crypto or life or whatever, what would you guys suggest to those listening?
As a trader, diversify a little bit. Don't go all into one position unless you absolutely 100% know the momentum's in your favor. Other than that, I wouldn't suggest it. And maybe don't go 100, 200 times, 125 leverage. Maybe nothing even over like a 5 times leverage. Maybe not even that if you're just getting into crypto. Practice.
Kyle Kemper?
Yeah, I'd say just for the noobs, stay away from trading, and I would also stay away from trying to time your market entry perfectly. And I recommend dollar cost average strategies of putting a little bit over a long time as a way to mitigate your risk entry, and not feel so butthurt when the price jumps or falls.
Enzo?
I think that if you're in this space just to make money right now, I think you are probably not in the best space. I think that you could trade options and futures on normal stocks and equities and do actually better and be safer. And you could do paper trading and test all that stuff out and learn how to trade before you enter this space. I think you want to be in this space because you want to believe in it, and And in that case too, just do your due diligence and do your homework, and don't be afraid to ask hard questions. If you want to invest in a project, call them up. I mean, have a conversation and see if they're interested in you investing, or whatever, because it's investing, buying tokens. It's hard to say sometimes what you're actually getting out of it, and just do your homework. But as far as buying Bitcoin and selling Bitcoin, I think also you got to learn more about the space before you're just kind of rushing into it. And I would be careful, and I would probably actually diversify, but that's it.
So research, due diligence, diversify, and don't use 1,000 times leverage. All right.
Yeah, you should make that into a meme.
Use it.
All right. Well,
Two things. I ran a poll over on polls, and it says 38% of the people that took the poll got scammed in crypto. That means who knows when they got into crypto, but find a mentor or a group of mentors or whatever who's a specialist. Several people, form your own due diligence, but ask questions to people that actually care, not people just trying to make money. That's all I gotta say.
And also from getting scammed, it doesn't mean that you leave. Like it's
part of it. Yeah, just like that's why I say diversify. If you got scammed, you don't go all in because they could take everything. If you're trying things here and there, there might be new scams popping up, but I have a pretty good list of like exactly the type of scams that I've seen. There's like variations of them. Like there's one coronavirus, but there's 3 different strains currently happening or evolving. Same thing with scams. Like you'll have one main scam, and then you have like sub scams of that scam. So I have a pretty good dial in on that crap.
Sorry guys, I have to call it. We got to move on to the next one. Thank you guys so much. Another great panel.
Kyle, please post the link to your ebook for us all to have.
Oh, for sure.
And just a quick shout, if anybody wants to join the conversation, please join and go to CoinGenius.ai, and you can join our Discord where we're having these conversations. Kyle participates regularly, Steve Quan. A lot of the people that you're seeing at the conference are regular participants. We're just talking about the markets, what our thoughts are, and just trying to help everybody move forward. Great. All right, now moving on to the next one.